Hey, and a very good morning to everybody, and welcome to the TriggerCharts pre-market rundown for December 11th, 2020. Quick update on what's going on. We see the futures are coming in a little bit this morning. We see that there is, one reason or another, vaccine issues you want to talk about. You want to talk about some of what happened at the ECB yesterday. Doesn't really matter. The fact of the matter is we're seeing that the Dow Jones Industrial Average Futures down 1.4, a lot higher than they were earlier. ES, or the SPOOs as we call them, the S&P, down about 23, and the NASDAQ down about 73. This is up a little bit from where they were earlier in the morning, which is interesting. A couple things to note. First of all, I'm Andrew Horowitz. I am the co-founder of TriggerCharts. Thank you for joining me. We have a lot to talk about, some indicators I want to go over. Your stocks that we're going to talk about as well this morning, some setups, a little bit of education. And on that note, I'll mention that this is for educational purposes only. This is not an offer to buy or a solicitation to sell anything of any kind. It is not a recommendation. It's not a suggestion. It is to be used for educational purposes only. That's it. There's nothing else to talk about. Make sure you understand that. Couple other things to note. We talk about the indicators that we have on TriggerCharts. You can check out everything at TriggerCharts.com. Also, on the TradeStation Trading App Store. If you give us a review, well, we'll give you something in return. Also, anybody that subscribes to the Commander Series, well, you can get a 4-hour, for free, $199 value, a 4-hour course that we call a coaching course. That gives you some really good, in-depth, I would call it evergreen information on trading and understanding setups, understanding market profile, understanding volume-based analysis, which is really important because as opposed to some of the indicators that just give you some crossing lines that are just price-based, we work primarily with price and volume. And the point of that is that you get the benefit inside of there of looking at where investors are actually placing their bets and where they're doing it with conviction. I want to follow along where the major volume is on the support and resistance, not just simple lines. And that's why you see oftentimes when you look at our charts that have the indicators, whether it's the altimeter or the autopilot or even radar, you'll see that, wow, look at that. Stop dead on a dime on support, right where we had a line drawn by our algorithm that we calculate on a regular basis, and it rolls out, rolls through. You can check historical reference as well. So we'll talk all about that. Let's close this here. These are also recorded. You can go over to the TriggerCharts.com website and check out that, as well as a lot of user guides. We try to make it as easy as possible for everybody to understand. So definitely check that all out. So with that, that's a mouthful, isn't it? With that, I'll mention, just because somebody just said this in the chat, if you did in fact buy and purchase the TriggerCharts Commander Series, send an email to support@TriggerCharts.com. Support@TriggerCharts.com. Tell them that you subscribed last week, and we will be happy to send you the keys to get into that 4-hour course. All right. What's going on right now? Well, we have a lot of inventory on the markets, don't we? We have major, that's an understatement. We have extraordinarily large levels of IPOs from a market valuation coming to market and underpriced, even though they kept raising prices into the actual print. We saw this week 2 majors come out. We saw DoorDash, we saw Airbnb, both which were spectacular IPOs. Probably you couldn't get that in the market unless you were an insider behind the scenes. And if you got in the open market, you may have made a little bit of money. Airbnb would have been tough because it opened up at the 150s, then moved to 160, closed to 148 or so. DoorDash, the same thing, very hard to get any profitability on there, and sank yesterday by 7% one day after their IPO. So it's interesting to note, and I think that we have to realize, is what happens and what is the market effect of new liquidity coming on the market, new inventory as we call it. Well, it takes away from some of the other things, right? There's not, generally speaking, an unlimited amount of money to go around and invest in everything. So when we have a day like we had over the last few days where we saw Airbnb and DoorDash come out, one of the things to note is that that is inventory that takes away from other areas, and that is then placed into that. Same thing happened when Tesla was announced that they were going into the S&P 500. Enormous sums of money had to move into that because it was part of the S&P 500, and it would have to be a rebalancing of that done mid-December. What we saw was that there was money coming out of other areas to put into Tesla because index funds were forced to do so. So this whole idea of this inventory and these first day moves that have been incredible is something to take notice of. You add that to the incredible amount of uptick in things like SPACs, very speculative investments, not with a true fundamental underpinning, pretty much just throwing darts at hope that one day this is going to be good. Like, for example, Fisker. Fisker is a bankrupt company for many years, doesn't have a product out. All of a sudden it's being bought by a SPAC, and the SPAC flies higher on the idea that, oh, this could be the next Tesla. Here's a little secret. If it was the next Tesla, or could have been the next Tesla, Fisker, which was there in the beginning, would have been the next Tesla already. It's not, it won't be. It's highly impossible and improbable. Meanwhile, Tesla keeps moving up with all these other EVs out there, whether it's Workhorse or Nikola as an example, and all the other peripherals involved in the electric industry. You know, you have things like charging stations, and you have things like solar power that's going to, and hydrogen power, and just goes on and on. You know, plug power. We're looking at blink charging, things we've talked about, which are great trading vehicles. Some of those are backing up right now, and this is something that I would call a sign of a speculative euphoria in markets, kind of what you see in the last stages of a market run. That does not mean that necessarily the markets are going to turn down tomorrow or that we're going to have this horrible crash. But there is some speculation that is additive to the markets right now that you have to agree is kind of frothy. When we look at, for example, our KRI, right now coming back a little bit to only a +1. But look what we saw here before it rounded. We saw these clusters form, right? We see that, and we talk about this a lot on the KRI. Again, there's one thing only, just gives you this chart. You can't change it. It's what it is. Nothing, no different symbols, nothing. We see that when we have these multitude of clusters, and oftentimes when we see that final spike day, things get a little hairy. Now, we didn't see that here. We didn't see that final spike day. You know, there's a little bit one right there, but not that exhaustion move on the higher, that ramp and parabolic move on that one day that we saw some of these that were turning points. Kind of just a smooth move up on an overbought situation. But what I would say is when we look at this and when we consider this, we have to think about the fact that there is a significant amount of excess in the markets right now. I don't think anybody disagrees with that that's listening right now. ECB is also pledging more money, more bond buying. US dollar, though, remains weak. You know, you would have thought with Lagarde's discussion yesterday about ramping up the bond buying, increasing stimulus and quantitative easing, that the euro would have come down. The euro is not coming down like it should have been, quote unquote, should have been in this kind of environment where you have a significant amount of drawdown or a significant amount of stimulus from areas around the world. The idea is, and the thought is, that the U.S. is going to trump any stimulus by any country, thereby keeping pressure and a lid on the upward momentum of the dollar. That's why we've been talking about gold so much and silver, and the idea that while it's been a little bit weak lately and it hasn't been the strongest position, up $8 in the pre-market on the futures right now, gold. The fact of the matter is very good for, let's just say, things that are priced in dollars. Oil's been rallying, even though we saw a major build last week of 15 million barrels on Wednesday. Well, because one, it's priced in dollars. Two, because OPEC is ratcheting up prices regardless of the fact of demand requirements. So we have this trend that's going on that has also been good and a tailwind for multinationals. That's good for the big players, the big companies out there. That's important. And what's happening is that this is providing for, again, this underpinning of supportive action for markets. Now, we've seen, I think this, I have to look at this, but I think this week could be a down week on markets, or right about, depending on what we look at. Small caps are up, I think. The S&P is marginally up. The Dow Jones has been down for a number of days, even with Disney up about 8% in the pre-market on news that I find highly questionable. Looking at 2023, 2024, no profitability until then, adding a lot of users, questioning how many of them are actually paying, raising the price by $1 for Disney Plus, coming out with all sorts of new movies and content for Disney Plus. Still the parks being closed, still a lot of sports not taking an uptick. The cruises shut down. You go on and on with some of the things related to Disney, and it's still a big problem. Meanwhile, shares are at an all-time high going into this morning's print with, again, an 8% move on the upside. Dow futures still down. They're a big drag, so there must be a lot of underlying weakness in many other names in the Dow Jones. Cryptos. We discussed this last week. We talked about what's going on there. Last I saw, let's take a look here. Crypto right about the 18,000 mark, coming off the bottom last night, was in the 17,006 range. A company that we talked about was MSTR, and I talked about the potential for a short on this stock last week. So we're looking at daily. So that was up about 340. Could have collected probably about 50 points on this short. This is something that I did, and we found this to be successful. Closed the position as it hit support, always looking for where our support lines are. Also, one of the things I talk about and teach and preach, and I'm pretty radical about, is this whole idea of what? When we look at a chart, we look left. We always look left, and on the radar screen, we look left as well. Well, when we look at MicroStrategy, it's been long for 9 weeks here, but we get a long alert on a daily, but yet the short-term trend is nowhere to be found. We see it consolidating when we look at the short-term trend between pretty much 277, 297. And that gives us a reason to pause. Again, this is a 30-minute. We can look at 60-minute. It's just for education. When we look at this, we can find that there is a significant amount of range that's going on. Obviously, from 290 to 243 is the range there. Once we got so far above the levels, getting a lot of arrows going on here. Once we got above all these levels, and it kind of skyrocketed, and then we saw that turn down, reversal, was time to think about going the other direction. And this is because the reason why we see such an incredible amount of move on this stock, as an example, is because now it was said to be a Bitcoin play. They bought $425 million worth of Bitcoin over the last number of months, and they did so in their on their balance sheet as a cash alternative. Now, they made some good money with this, but this is a double-edged sword. Now they're talking about issuing convertible bonds to buy another $400 million worth of Bitcoin to put on their balance sheet. So the company and the CEO, Michael Saylor, is doing a big bet on the idea that, hey, you know what? This is going to be great for our balance sheets long term. Problem is that at the same time, there's a concern about the fact that what if it doesn't go in your direction? Now you just ate through balance sheet assets dramatically. And this move, look at this move from we'll call it $164. I'm not even talking about back to over here, 124. But this move from $164 in November, just in November, to 350, pretty much a doubling up, definitely a doubling of the stock on this thought that, hey, it's a Bitcoin play. Ridiculous. Earnings are not going to meet where they're going to meet. The stock is overdone. There was no reason the stock should stay up unless we saw the continuation higher of Bitcoin up to 20,000, 25,000, 30,000. Maybe there'll still be a lot of excitement. But now Bitcoin turning around right at that 18,000 mark, which seems to be some magical number here. I got about 18,100, but below that we have 17,290. Like I said, we saw a double bottom here, which a lot of people that trade Bitcoin just use simple levels of drawing a line. Where was the low? Where was the high? That's it. They don't use a lot of sophisticated tools. Because it's primarily retail investors, right? So they're really not doing a lot. They're not like you and I, where we have some great tools where we can really focus in on what those levels are. And that's the real advantage of what we have here, because they're just flying by the seat of their pants. We have some really good information on a constant basis that's giving us where are those levels and where can I have high confidence that we're going to hold, break through, or break down. You know what I mean? So that's a really important distinction there. Getting back to where we are, a couple other things. CPI recently this week came in above estimates, just slightly. They're still talking it down, saying it's an aberration of 1 month. It's not a big deal. Crude inventory, there was a big build. As I mentioned, 15 million barrels, but prices did move higher. Pretty interesting. Looking at crude futures for a second here, we're seeing that from the bottom down about 34, 35 in November, when the talk was all about the potential for a reopening, a vaccine, OPEC starting to increase prices on China, OPEC continuing with their production, but yet inventory building. There's just a lot of excitement going on. That also has a lot to do with the the dollar. There we go. I mean, look at this drop of the Dixie, DXY, dollar sign DXY is the symbol here, dropping straight down, holding very nicely right here, though. 90.66 seems to be a little bit of a base. This is a basket of currencies against the dollar right here. But look long term, I mean, we're in a, I don't think anybody disagrees, from 102 down to 90. That's a pretty significant slide on the dollar. Very supportive for markets. When you start seeing that turn around, that can be an issue. But we did call this pretty well. Short on the dollar, back about, right about here, 92. Got out of it about 91. Several times of just a beautiful trade on the downstroke and on the downtrend. We look at this over here. If we put this in dollar sign DXY, we can see that it's short 3 weeks, nothing on the daily, kind of out. We see that consolidation happening, so that aligns really nicely. Short on the 240, also a quick profit that happened on the 60-minute. That's what this column is here. You can always scroll up and see what the column labels are on this. But a long profit on there, and on the 30-minute out. But look at this really nice move that we saw yesterday. You could have traded this maybe against the euro, possibly against the yen, and you would have seen a nice little pop on the way up. Not a lot of people really love trading currencies, but if you do, this is one of the better tools. We like the 240-minute time frame for that. All right. I wrote this yesterday, last evening, before markets closed. Markets turned around pretty strongly yesterday on the bell. That Pavlovian response of markets on the bell opening up and miraculously moving higher. But I was looking at a lot of different indicators and looking at some things, and it seemed to me that the markets they felt heavy. From a technical basis, I was looking at a variety of indicators saying, you know what, there's this great opportunity for it to go down, but it doesn't, and it keeps on popping, holding, moving higher, or at least holding its level without a significant sell-off. Even though yesterday morning we came in with a 1% downstroke on the NASDAQ, turned around positive by the end of the day. One of the big things that's really going on right now, and I've been talking about this for a while, and I want you to think about this, is the fact that there's a giant carrot that keeps on being waved right in front of our noses every single day about the potential of more stimulus coming from the government. They haven't made any progress, but for whatever reason, I think they're doing this on purpose to keep us on our toes that something's happening. Because they know that whatever they're going to do is probably not going to be enough to really right the ship going into the first quarter of next year from an economic standpoint, from employment benefit standpoint, from the fact that businesses that are not going to be able to weather the storm. So why not keep on thinking that it's there, it's going to happen, it could get better. So the optimism is there. This idea that every day there's 20 or so headlines of, this guy in Congress saying it's a deal done, this person at the White House saying, you know what, there's significant disagreements, but we want to move ahead. The other person, Nancy Pelosi, Mitch McConnell, saying that we're going to do it, we're not going to do it, we're changing it, we're going to increase it, all day long this is going on, and it's moving markets around pretty significantly. If they don't do a deal by midnight tonight, there's a shutdown this weekend of the government. Personally, I'm always a big fan of a shutdown of government. I think the longer they're shut down, the less harm they do. That's a whole different discussion, though. The fact of the matter is that we need to do something very quickly because there is a major cliff coming. And that cliff is that a lot of the federal unemployment benefits that were put in place are expiring the day after Christmas. So in other words, instead of getting that great Christmas stocking, you got to swap it out for a stocking full of coal if you are unemployed and you're looking for the stimulus to happen if it doesn't happen in time. Now, with that in mind, I believe stimulus will happen. There's going to be stimulus. We will see it. There will be the opportunity for them to revive some of the unemployment benefits, PPP program, hopefully that will be targeted specifically to areas that need it. There'll probably be some bailouts for things like maybe the airlines again, possibly the cruise ships, and also for movie theaters, some restaurants, etc. But again, it all depends on how fast this whole vaccine is going to happen, what's the uptake, what's the direction of the trend, which is horrible, of the pandemic and everything in between. The longer this goes on, what I mean by that is the longer that we have the pandemic, the longer people are concerned about going out, it becomes habitual. This idea of not getting near people. I don't know about you, but it's like, okay, I'm keeping my distance, keep my distance. It's become a habit. I go out of the house and when I leave the house, I'm like, what am I forgetting? What is it? I feel like I'm forgetting. Get in the car, start to go, need my mask. I left it inside. I got to go grab that mask. Put a couple of extra in my glove compartment because you don't know what's going to happen here. So there's a lot of that happening right now. my point is markets feel a little heavy. Now, we are seeing them pick up a little bit into the open here. And again, some of that is probably Disney on the Dow Jones, a little bit on the S&P. We're seeing an uptick here on the NASDAQ, and we could probably pull that up and see a little bit of a V off the bottom here, right here. So we were down at 12,267. So we're up about 80 points already on the Qs from where we were. And again, as we've seen on a regular basis, let's switch this to a shorter term time frame. You know, on the opens, probably right the open right here. You know, throughout the day that it kind of comes in, it moves up. If we can go back even further, you know, get these kind of moves off of an open. Where's the open? 6, 7, 8, 9. Where are we here? 4, 5, 6, 7, 9 o'clock. A big open. Then it kind of comes down. You know, then you get these big moves up. You get these reversals. We'll see what happens here. It's all about reversals on these futures right now in the markets. All right, finally, big rotation happening. Energy, banks, financials, interest rate sensitive, still playing really nicely as the yield curve, you know, starts to widen a little bit. Tech, healthcare being sold, but yet not too bad to be even concerning. Economics next week, we have import and export prices, retail sales. That will be important. I think we're going to see a little bit of a slide there. Like we saw the initial claims this week increase to over 800,000 again. We have an FOMC rate decision, probably nothing burger on that. Housing starts, important, one of the important areas of the economy that has been doing really well with mortgage rates at a low probability is we're going to see good numbers, or at least reasonably, relatively good numbers on housing, and we'll see more initial unemployment. And we got a bunch of stocks to look at, so let's do that right now. Somebody wants to look at natural gas. Let's look at that. Natural gas up about 1.5% this week. We talked about this last week, and I said, you know, you could see I think I said, this is what I said, you could see a reversal trade on this. It's in a downtrend. It doesn't look very good to me. I think it was natural. Yeah, it was natural gas. It was a long-term downtrend. There could be a reversal. It would be a trading reversal. We did see that off of the bottom there. It was up really nicely yesterday, up a little bit. Seeing on a daily basis, I want to explain something here. I think this is really important. I think we talked about this last week, but I want to kind of go over this again. We see this yellow, which is an alert for a long, but however, where are we going to? Well, number one, we got to look at where the last number of these boxes were that I'm drawing, which is the altimeter ranges, right? We're seeing them lower, 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 lower. That doesn't mean they can't start moving higher, but then you have to look at where the resistance level is. I would think that, you know, you have to about 270. And if we take one more tool just very quickly and draw a line across kind of where we are, that we could draw several across. Well, let's even go up to 280. 280 looks like it's going to be a top end of a cycle that could be resistance on the top end. Now, that's right now trading at 258 and change. So you have some upside opportunity here. Something that I would trade. I'm not a natural gas trader, but if I'm just looking at charts, only looking at technical analysis, yeah, there's something to be said here that natural gas could be an interesting play, obviously, into the winter, which is probably pushing some of that trade. Considering the weather, obviously, the colder it is, the more natural gas will move up. Big cold snap down here in the south, probably playing into that. Question about global warming, what's happening there. But if we have a colder than normal winter, we'll see natural gas probably, and heating oil probably move up. But natural gas right now is a counter trend trade, probably has up to about 280. In my opinion, unless something miraculous happens, if you want to trade it, stay with it up to that point. Right now, in a bit of a consolidation, got a short call on the short term. That's 10 minute. Let's go to 30 minute. Still in the long. Well, actually, we moved out of long. We have a orange there. But orange is a out of position. So you got in at 250, got out here about 259 or so on that. Again, a lot of resistance on the upper end, a lot of consolidation. But what we also have here on top of all of it is the fact that we have a little bit of the potential for a move lower into this level here, which is about 248. There's nothing really below these levels. Kind of, again, looking from right to left is the way to look at this. Somebody has a question on ISRG, that didn't work. ISRG, got to type it correctly to make it work, which is Intuitive Surgical, a robotics company, obviously, saw a significant downstroke. You know, you would have thought that this would be interesting to do because if you can't get into the OR physically, well, there are some robotics where you can stand outside or do it remotely. and ISRG is one of those companies. Right now, looking at green lights from a trend basis, which is good. Looks like support here at about 742, give or take. I mean, could you come down to about 718? Probably would be a nice area to look at, but very limited amounts of congestion there. Right? Yeah, 725. 725 is kind of the number I would look at where you see a much more amount of congestion right there. I would look for kind of a hold at 745, possibly look at this. Again, expensive stock, but nonetheless, interesting trend, and I think it's a good one. Let's go to the top of my list here. Tesla, do we want to talk about that? CRISPR. There's a couple of stocks. This stock, CRISPR, which has been interesting. They came out with a share offering today, but right now trading about 149. You see that lift off over 110, right kind of at the end of December from 110 to 150. A little bit stretched, overdone, but if you just follow the colors, look how successful you would be right now. Right now, you have a very, very wide level here. Take your box tool, draw. This is a range. Now, you don't want to play that range because that's from 150 to 120. So right now, it looks like about 142 is the downside possibility of support, right where we drew this line, 140, give or take 142. 109, 110 was the liftoff point, right about there. This stock, and wait till you see this next one. This is called CRISPR. This is a way of recoding genetics in your body for multiple things. Well, wait till you see this next one. You ready? Check this out. Here it comes. Ouch. Look at that. That's his competitor. They just got an application in for sickle cell for doing some work there for an FDA analysis of their work. Stock, same date range, took off from 29 to 66. Now, overextended, but look at how this was an incredible amount of consolidation throughout that time there. And when it finally broke up above, that was it. No stopping it. CRISPR down only about 2%, 2.5% today. What else do we got? SPE, interesting company. This is a Switchback Energy, another EV-related company. Has some opportunity, I think, on the upside. Obviously overextended, like many of these are. Kind of looks the same as some of these other ones. Blink, right now, 25 bucks. I talked to you about this way back at 11 bucks. Blink still has some opportunity. Again, I would trade this carefully. Asana, this was an IPO that came out that I thought was interesting to look at. One of the things that we see here is once it gets above, in my opinion, there's not a lot of readings you can look at. This is just anecdotal from years of doing this. Once you get above that high point of where you saw the IPO come out, so you saw that big dip, a high point. Earnings came out, was up at 32, actually 35 in the overnight session, reversed down, now trading at 27. So now we're below again. So it kind of leads me to believe that there's really something going on, that they're not so sure about the earnings. Airbnb out yesterday. Oh, well, we're not going to talk about that. Fastly, I think this is one of the most overrated stocks. I think there's a lot of chatter about this. We got right up to the level of resistance. If we could just draw it right there. Very easy to find the latest levels and then draw it. I think that you probably have a good opportunity for a short down to about 78 again on this from the look of this chart. Now, we are in a daily uptrend. We are green. I would wait till we see that top out, and I would wait to see if, in fact, we can get a new altimeter and a rotation. Now, going against the grain of this particular chart, which is green right now, is not the best idea because there is a lot of momentum in here, but just something to consider. And then finally, Disney, again, probably why there's, look at this, all the way, this dot way up here, way up to the top here. Is where they're trading right now. Gapping open from 151, all-time high on Disney, which is pretty unbelievable considering the disaster that they are. We're going to end it right there. We'll talk about some of the other ones that you have. Tyler will get to those next week. Make sure to go over to TriggerCharts. Make sure to go over to TradeStation. Tell your friends. Sign up. Everything's for free 10 days. Check it out. Thank you so much for joining me, and I will see you again next week.